Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURAUD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting here from the monthly time frame, what do we see here on the monthly? We can see a very strong impulse to the upside, followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market has currently retraced exactly to the 0.32 of the Fibonacci taken on this monthly impulse, which is also currently aligning perfectly with this previous monthly resistance, which was acting as resistance here and again here, which is now turned support at this level since the market has broken it to the upside and is currently retesting it. Now, this creates confluence of support at this level, which we could in fact expect this market to test and then potentially to reject to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, what we can notice is that the market is currently testing previous weekly resistance from which this rejection to the downside was created, which is now turned support at this level. As we're testing previous resistance turn support, we could expect a potential rejection to the upside away from this area. Going down on the daily time frame, what do we have? Now here on the daily, this is where things get very interesting. In fact, what we can notice is that the market has just created an M pattern. Now, in general, after the creation of an M pattern, what you could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, we can see how in the long term net positions have been increased. We went from having the low here at 139k net positions all the way up to now having 165k net positions. So there is definitely the possibility that the euro will get stronger, considering that institutions in the long term have been increasing their longs, going from 215k to 241k. And if we look at the shorts, overall, even in the short term, they're getting decreased from 80k to 76k. So the euro is currently starting to get a bit stronger. So there is the possibility of a potential move higher. We look at the AUD and we can see how on the AUD institutions have been moving to the bearish side of this market, going from minus 27k net positions down to minus 44k net positions. This shows how the AUD is a currency that institutions expect to get weaker. And a weak AUD and a strong euro is exactly what we need for a potential rejection to the upside and the completion of this M pattern at the neckline, which is the previous support turned resistance. We can also notice how all this area is quite strong support here. From a daily perspective, this area was acting as previous support here, again here, again here. All this previous support is currently still acting as support at this level, so we could expect the market to test it and then to reject it to the upside. So there is definitely a possibility of a potential move higher. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this and pattern. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, from here you can join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of the video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.